Let's connect with Sanjeev Prasad, Senior Executive Director and Co-Head of Kotak Institutional Equities, who joins us with his take on the current market setup. Sanjeev, good morning and thank you for joining us. Sanjeev, let's talk about the earnings season. How would you map the earnings season? Because surely this time around we've got more upgrades than downgrades.
But if you look at the results season, it started very well with a lot of companies beating numbers quite handsomely. Particularly in the case of automobiles, there was a fair bit of gross margin expansion. Realizations turned out to be far better than what we had built in. So there was positive surprise on the automobile sector. Then IT also had marginally better expectations than our and street numbers. And finally, NTPC had a very good set of numbers. So all those companies reported earlier. Some of the companies reported later, they were fairly disappointing. In particular, I would highlight Coal India, some of the other metal and mining companies, and also ONGC. So on the overall numbers, now if you look at for the coverage universe which we have, the Kotak coverage universe, we're expecting about 5.9% growth on a YOY basis for this quarter. That's come to about 7-odd%, it's about 2-odd% higher than our expectations. So not that much of a beat, and this is on an ex-energy basis because obviously there was a lot of positive surprise in the energy sector because the government compensated the oil marketing companies compared to our expectation of zero payments in the quarter. If you look at the BSE 30 index, the YOY growth was about 10.9% compared to expectation of 10%. So marginal beat, but not a lot.
Sanjeev, so how are investors and funds looking at the upcoming state elections? Do you see the BJP winning 4-0?
Okay, my view on this one is solely based on interaction with the investors. This is not our view or my view or the company's view. But as of now, it looks like people are hoping that somehow there is a BJP government that gets formed, and that will be positive for the market. Again, let me clarify, this is what investors are assuming and hoping. Now, of course, we have 4 state elections. The results will come out on December 8th. I mean, I'm keeping Mizoram aside for the time being. So there are expectations that if the BJP ends up with a 3-1 or 4-0 victory in the 4 major state elections, then that could provide a fair amount of momentum for the BJP heading into national elections. I assume that's what the market is to some extent focusing on and also excited about. But let us wait and see. Indian politics and elections always can throw surprises compared to the general view on the street. Anyway, December 8th we'll come to know. So let's wait and see.
Sanjeev, what is your view on the banking pact though right now? What is it that you like or dislike?
Well, look at it this way. There are balance sheet issues and then there is P&L part. Now, as far as P&L is concerned, the second half in general is going to be a little bit of a struggle for all the banks and particularly for PSU banks from the way they have treated the losses arising in the GSEC portfolio because of the RBI circular. I think there will be a lot of provisions in the second half compared to whatever they have provided in the September quarter. So, banks have interpreted the RBI circular of August 23rd in their own way. So many of them have interpreted in a way that makes the P&L for this particular quarter look very good. But second half provisions are going to be far higher. This is based on that account. Also keep in mind the fact that if 10-year yields continue to be in the zone of 9% plus, then again you will have losses on the bond portfolio because the September period ending 10-year yield was more like 8.5%. So whatever is the AFS portion which is still outstanding, you will see losses over there. So that's one area of concern. The second challenge for all the banks will be in terms of growth. Clearly loan growth is slowing down. And this is probably more relevant for the private banks who have been somewhat careful in lending. Some of the public sector banks continue to be very aggressive. You saw some of the numbers, like Canara Bank, which was like 30% loan growth, which is absolutely stunning. And the other factor, which is the non-interest income part, of which fee income is a big number, again, that would be pretty muted going forward. So on a YOY comparison basis, not much to cheer as far as the P&L is concerned. Now coming to the balance sheet, and this is where the real issues are. It's not as if the problems have been addressed. There is a lot of refinancing going on. There is a lot of, to some extent, dressing of the portfolios which is going on. And you would have read the statements of the Deputy Governor Chakravarti, as also the ED, Mr. Mahapatra, over the weekend. And somewhere I think the RBI is also getting a bit worried about the way restructuring is being treated more as a way to postpone problems, not recognize NPLs in the Indian banking system. So there is clearly a problem out there. And if you look at slippages, in the second quarter, it was a reasonably high number. Obviously, it was lower than what you saw in the first quarter. For the banks, the PSU banks which are covered, it was 2.7% compared to 3.7% in the first quarter. So it was lower, but again, the fresh slippages still continue to be on the higher side. So I think the pain is still out there. It probably is not been recognized the way it should be because of various both official restructuring and maybe some amount of unofficial restructuring which is going on.
Tata Steel surprised with the Q2 numbers. How do you see metals panning out, especially the ferrous pack?
Well, the rally has been a pretty massive one actually in the last 3-4 months compared to their low levels. Tata Steel has actually gone up something like 80%. Even Jindal Steel and Power is up from below 200 to 240. Hindalco from below 90 to about 115. So the rally has been pretty swift and steep in many of these names. Now our sense is most of the stocks are looking now reasonably fairly valued. Tata Steel, fair value is more like 400, so the stock is already there. And JSPL and Hindalco both have again a lot of issues in terms of allocation of coal blocks and profitability of the new projects which are being built without any guarantee of either the raw material, which is either iron ore or bauxite as the case may be, and coal blocks. So the profitability of many of these new assets will be under some amount of stress, I would think. Very low ROIC for most of these new projects. So I'm not really a big fan of these companies for the simple reason a lot of the profitability really comes from the fact that they have historically got cheap assets, that is raw materials have been given at a very low price earlier. And if you look at the royalty being paid on any of the mineral ores compared to, let's say, crude oil, it's very, very low. So my concern is at some point in time, as India moves towards a more transparent process for pricing natural resources, whether you will start seeing a higher royalty on mineral ores as you see in terms of crude oil. The lessons from the telecom sector is very, very important for the metals and mining sector. India started the process of allocation of spectrum at pretty low prices. Then as the government started realizing the value of spectrum, it moved to auction process. I think you will see a similar move in the metals and mining space also. And raw material prices are going to get more linked to international prices, either in the bidding process itself, when the government, gives out new blocks, whether it is iron ore, bauxite, coal, whatever it may be, or it could be in the form of the government taking out money through some taxation mechanism, either royalty on top line or a special tax on profits. I think that is not something which we can rule out. So I would be a bit careful on the metal space, especially when valuations are looking somewhat fair.
Sanjeev, so how do you like the oil and gas basket, especially noise from the government now to control CAR and subsidies, Reliance, oil marketing companies? What's your take?
The problem with the sector, there is a lot of noise, but there is no sound on the issue which is most relevant, which is the subsidy issue. If the government can just put in a transparent subsidy sharing system, a lot of these companies could get significantly re-rated, because the real issue is, nobody knows how to really get a handle on the immediate earnings of these government-owned companies. Your point which you raised about the government being somewhat fixated on this 4.8% gross fiscal deficit to GDP number is very valid, because as of now it looks like there could be a big slippage. So obviously investors are concerned whether the oil companies, particularly the upstream companies, may be made to bear much higher subsidies compared to what they're bearing now. Even the $56 per barrel is a very, very high number. If you take, oil price at, let's say 100 or a base of 100, on a net basis, after you take out royalties, cess, subsidy burden, operating costs, and DD&A, what is left is about $10 a barrel for the oil companies, which is not sufficient for their capex program, for the reinvestment programs. Remember, these are companies which need to continuously find new oil, redevelop their existing reserves so as to sustain oil production. And at the current level of net realization this oil companies are making, it's just not sufficient for them. So, the government is in a very difficult spot. On the one side, you have to enhance energy security, which means probably need to give more money, that is allow the upstream oil companies to make more money. On the other side, you have a big problem on the fiscal subsidy and very high oil subsidies. So how do you balance the two needs, both of which are probably equally demanding? So there is obviously a lot of action on the sidelines. I mean, on the good side, it looks like the Ministry of Petroleum and Natural Gas is taking a much more pragmatic view of exploration and development, and looks like there could be some amount of positive and progressive way of looking at some of the issues which have hurt investment in the sector for a very long time. Some of the issues like allowing exploration in developed blocks, I think that's a big positive. The proposal to have some sort of a bank guarantee from Reliance in lieu of higher gas prices, I think that's a very good move. Till the time that issue gets realized, I think it's fair that Reliance gets the market price for KG-D6 gas. And of course, the big issue of diesel subsidies, compared to street expectation, which is very negative when the government first announced that plan, continues every month you see half a rupee increase in diesel prices. So I think there are a lot of positive steps been taken on the sidelines, which will have benefits in the medium term. The immediate problem is the subsidy issue, which is depressing the stocks compared to their real fair value. Let me just give you one example. Something like BPCL for 2015, if I remove the subsidy numbers which we have assumed, the EPS number of that company would be, more than 40 rupees per share. Currently, we are building more like 30 rupees per share. So that's the level of earning disparity we are talking about in terms of how much damage subsidies are doing to the P&L and of course to the balance sheet of the government-owned companies.
Sanjeev, Telecom M&A norms and auctions will start soon. Do you think investors are now inclined to buy telecom stocks on every dip?
Oh, definitely. I mean, both the stocks are seeing a fair amount of interest actually for some time. Obviously, investors were very nervous, let's say 12 months back, when you had concerns not only on the operating front, because at that time the market was still looking fairly competitive, pricing was still challenging, and of course there was a huge amount of uncertainty on the entire regulatory mechanism in terms of renewing licenses, in terms of the prices for the new spectrum, etc., etc. I think the way the market is now looking at this sector is, of course, the regulatory issues are still outstanding. But the way the telecom sector has evolved in the last 12 months is that it has effectively congregated around three large players, which is Bharti, Idea and Vodafone. And they effectively control about 65 to 70% of revenues of the market. The balance sheets of all the other companies are in very bad shape, whether it is Aircel or Reliance Communication or TTSL. And I think whatever may be the regulatory impact going forward, whatever reserve price the government decides, whatever is the final auction price of new spectrum, what is the renewal charges, etc., I think we should be reasonably assured that it is going to be passed on to the consumers. The balance sheets of the telecom companies just do not allow regulatory costs to be borne by them anymore. So I think regulatory issues, even though they are uncertain, I think the baseline over here is that they will be passed on to consumers. So that is what is making investors a lot more confident about the sector. that, okay, fine, the environment may still look uncertain, but it's not as if that is going to result in damage as far as the P&L and balance sheet of the listed companies, which is Bharti and ID, are concerned.
Sanjeev, good chatting with you. Really appreciate you taking the time out and speaking with us.